Hello everyone, welcome to the after class tutorial section on financial modeling with Excel for women. My name is Gabriel. Let's get started. I'm going to be your facilitator through this section, and I hold MBA in finance. I also have a bachelor's degree in education. Maybe I'm a teacher. Then I have over 10 years experience, and you can contact me either via WhatsApp or email if you have questions or private tutorial section. The class is going to be broken down into three parts. We're going to have accounting part, and we're going to have the financial analysis part, and majority of the time is going to be in the financial modeling, where we spend a lot of time in Excel. Just like you are seeing now, the after class tutorial section is on our YouTube channel, which is on the eTeach Consult channel. Make sure you subscribe, type eTeach Consult in YouTube and subscribe so that you can get the notification if all notes are done. The other paid classes, we have the data analytics with Excel, which is a paid section if you want to go into data analysis. And we have the presentation one, which is PowerPoint presentation. Then we have the climate change, which is the new thing. The class is going to be a period of 3 months from September throughout to November, and it's strictly online on Sundays. Let's delve into the accounting fundamentals. Remember, this is a beginner class, and our objective here is to make sure each one of us here listening or watching us now would have a basic understanding of the fundamentals of accounting. Remember, this is only to prepare us for the financial modeling. Whoa. Accounting professionals and financial professionals have statements that they use in their department. And today we'll be focusing on the three of those statements. And these financial statements are used for recording financial statement. One is the balance sheet, the other one is the income statement, and we have the cash flow statement. There are others, but we will be focusing mainly on these three. We'll be making references to this very document here from the Harvard Business School online, which is a manager's guide to finance and accounting. The question here is, what is a balance sheet? Let's listen to what our guide tells us. So, according to this one, as you can see, to understand a company's financial position, you need to review and analyze several financial statements, which includes the balance sheet, the income statement, and the cash flow statement together with the annual report, which is not part of our section. So we have the balance sheet, the income statement, and the cash flow statement, which we will be interested in. So that is why we have the three financial statements here. Okay, back to our section now. Balance sheet, income statement, and cash flow statement. The balance sheet actually has three parts. We have the assets, the one that is in dark and gray. We have the liability parts, and we also have the equity, which is sometimes called the capital or the shareholders' equity. Let's get back to our reference document and see what our reference document is telling us about balance sheet. It says balance sheet is a financial document designed to communicate exactly how much a company or an organization is worth. That is its book value. And it achieves this by listing and tallying all the company's assets, liability, and the owner's equity. And as at a reporting date, it means we're on the right course. So the balance sheet is a document that records everything about asset, liability, and capital or the owner's equity. And this is to help arrive at the book value or the worth of the organization at a particular point in time. I hope this is clear. So we have the asset, liability, and equity. What is an asset there? To make it even very simple, asset is everything that the company owes. So everything that the company owes is considered as an asset. So it could be a building, it could be a land, it could be a car, which is a vehicle, it could be a certain equipment. Anything that the company owns, sorry, is considered as an asset. And liability on the other side is everything the company owes, something that they are yet to pay for is a liability. And in simple terms, when we say the owner's equity or the shareholder's equity, it's everything that the shareholders contributed. But for now, let's see what we can do and talk about only assets. The asset is also subcategorized into two, where you have the current assets and the current liabilities. Current assets is all the type of assets, that is everything the company owns, that will change its form or will be used within 1 year period. So they are current. A typical example is the cash. Every cash that the company owns, or cash and cash equivalent. We have the stock, which is sometimes called, or most often than not called, the inventory. It's also a current liability. And we also have the account receivables. Account receivables here means, as beginners, it means the debtors of the company. It means people who have patronized the company's services or have bought their goods, but they are yet to pay for whatever service or good that they bought or patronized. And those ones are all put under current assets. I hope that is clear. If this anything here is not clear, just put it in the comment section and we can take it up from there, or send me WhatsApp or join our WhatsApp page and we take it up from there. Now let's move to non-current asset. It's just the direct opposite of the current asset. That's a very smart one. So these current assets last more than a year, and a typical example is the PPEs. When you say PPEs, we mean plant, properties and equipment. So all your fixed assets, all the company's fixed assets, all the buildings, all the machines are considered non-current. So under current assets, they are subcategorized. Let's look at the other side of the balance sheet. Remember we said it has asset, liability, and the shareholders' equity. So let's back to the liability and equity part. Remember I said liability is everything that the company owes. It means the company is yet to pay for either a goods or a service that the company has patronized, but is yet to pay for it. Here, the liabilities are also categorized into two. We have the current liability and the non-current liability. Can you try defining what a current liability is? Remember you said current asset. So current means it's something that companies owes. So current liability here, try. In the comment section is fine. A typical example of a current liability is account payables. That's our supplies we are here to pay. And non-current liability is a long-term debt. So if the company has taken a loan from a certain financial institution that is very long-term, and that is considered here as the long-term debt. So everything long-term debt is placed under liability, but it's labeled as long, but it's treated as a non-current liability. Let's talk about the equity. Equity, there, just like I mentioned, is the amount contributed by the owner. So under that section, we keep everything that is coming from the owners and even retained earnings. But in accounting, the balance sheet must always balance. Remember, in our beginner class, it must always balance. What does that mean? It means if you add all the assets, every asset, whether current and non-current asset, it should be equal to the summation of the liabilities and the shareholders' equity. This is a very simple balance sheet, and let's see how it looks like in our imaginary company. So as you can see, you see the asset, then under asset, you can also see current liability, current assets. Then we break it down. Some of the various items I mentioned are the current liability, like cash and cash equivalent, account receivable, inventory, and so on and so forth. As we go on, we get to know the rest. So we group all the current assets items under current asset topic and we add them together. Then our PPEs, properties and equipment, and that we say land, they are not meant for resold. It's a fixed asset or part of PPE, the building, and every equipment. The other ones, there are other non-current assets which are also intangible assets, like if we have patent and all that, They are assets, but they are not meant for resold and they are going to be there for long. So we add all together, as you can see from here, we have $472,100 as a total asset. Let's move to the liability part and shareholders. So liability, you can see we have current liability and has its own balances there. As you can see, the account payables and on and on. Then under it, you have the long-term debt. And if you add all the accounts, it's balancing. I need you to try this by generating a very simple balance sheet for our imaginary company called Money Company Limited with these various financial records. Shares issued, they took a loan for 4 years, which is like a long-term loan. They bought equipment and all that. Try this. Whatever answer you get, take a picture of it, send it via WhatsApp or join our WhatsApp chat and group chat, and various participants are also going to assist you. See you in our next class. But if you have any question, leave it in the comment section below. Don't forget to subscribe. See you in our next class.